Hey traders, Raghee here. Welcome to Charts and Coffee for Thursday. So we've got we've got employment numbers. And now look, whenever we have jobs numbers like non-farm payroll, whenever we have inflation numbers, PCE, CPI, and GDP numbers, we're always going to see the market respond in a much more potentially volatile way. I will say, let's take a look at something. I'll show you something here from this morning's reaction in the pre-initial claims. And this kind of, it looks like shenanigans at first until you realize that this response was on the heels of the ECB, which reminds us that it's not just the U.S. central banks that have the ability to move the market. Around 7:30, we started getting more information about what the ECB is going to do with rates. So one of the things that I recommend to my traders, and I'm going to show you right now on the, here we go, on the economic calendar. I know that when we have more of a stock type focus, yeah, there are a number of economic events that we'll consider are important. And it becomes sort of this overemphasis maybe on earnings. But there are many types of high impact volatility events called hot zones, right? I've been calling them hot zones for the better part of a decade and a half. And why do I call them that? Well, it actually has to do with when you look at different economic calendars, a lot of times they'll color code the event. And you can see here on Forex Factory, though the higher impact events are color coded with yellows, oranges, or reds. So I would call these high heat hot zones or high impact hot zones. And you see there, red, 745. Take a look at the movement here. Now, why am I pointing this out? Because a lot of folks might dismiss this as having nothing to do with what happens with equities. But right now, when major central banks, second only, I'd keep an eye on Bank of Japan, the European Central Bank, and of course, U.S. Central Bank, the Federal Reserve. Just keep in mind the markets can absolutely move. And if you're caught off guard by this, it may look like shenanigans. It may look like some unexpected volatility when in fact, it was a scheduled event. So be sure to check out that Forex Factory calendar. Just wanted to point that out this morning. This happened well before, 45 minutes before the 8:30 a.m. Let me show you right here. 8:30 a.m. initial claims or the unemployment claims you can see right there. But again, 7:45, that monetary policy statement. And they're leaving, I'm just taking a look at my notes. They're leaving everything unchanged. Yeah, they're leaving pretty much everything unchanged. And they're going to continue their monthly pace of asset purchases as well. So, it's always interesting to look at what other central banks are doing because it is going to be very telling. All right, so let's jump into the questions. And first up, Alex asks, I like the potential pullback on YM and DIA. So Alex, did you check out the free video yesterday at the Simpler Trading YouTube channel? I did a deep dive on this very topic in that video. The simple answer is yes, and I am interested, but check out that video if you haven't already. Over at the Simpler Trading YouTube channel, you will see there's a free video, and I called it Dow Buy Pattern Forming. Can't get more basic than that. And check that out after Charts and Coffee or whenever it's convenient for you. And you'll see what I was pointing to in terms of previous pullbacks, the current one that we have now. And yes, I am interested in a buy. All right, next up is good morning, GLBE, sure. All right, so double green, very nice structure in this market, no doubt. Pull back to the wave, and the only thing that I would say about GLBE is just, it's a pretty new stock. And so even though there's a nice trend here, I would still want to anchor a volume weighted average price to the first trading day for the stock. You want to differentiate between IPO, DPO, because the difference between quiet period holding pattern and no quiet period holding pattern or holding period makes a difference in terms of behavior. And so typically DPOs tend to sell off pretty quickly after they go live, if you will. But this is buyable. This is buyable. I would say that the sell-off here was a little bit, I won't say uncharacteristic, but it's a pretty dramatic pullback. You might want to wait for a minor low or an inside day, but it is a buyable move. Absolutely. Was the overnight pullback in YM what I was looking for? I was looking for the bottom line of the wave to get hit. And so, yes, I am long YM because I just leave the limit order out there. So I'll leave a limit order to buy, which reminds me, never use market orders. Never do it unless you hate your money, which, which case are better charities to make contributions to than the market. But yes, I will absolutely place a limit order to buy, and I am long YM based on everything I walked through in that free video at the Simpler Trading YouTube channel last night. So yes, was looking for the bottom line of the wave to be tested. And I do have a small position on right now. And then I'll look to I won't say add, but I'll look for more buy signals as we go through today. And those were outlined and explained in that video as well. Thank you very much for the question. All right, moving on. Hey there, Mark. Good morning. Let's see. For months in the options room, I used a 1 minute chart. I noticed you used the 2. Mark, look, 1 minute versus 2 minute, is it going to make the difference between being a successful trader and an unsuccessful trader? I don't believe so. I don't think there's any magic in time frames. Probably one of the more popular questions that I get are, what's your favorite time frame? And I try to say none of them. So what I will say, Mark, is pick a longer term time frame. For me, it's the daily. Pick one shorter term time frame. For me, it's the 2 and the 5. And there's not a huge difference. I've just been using 2 minute charts on and off for probably the past 20 years. But I've been also using 3 minute and 5 minute and 1 minute as well. So it just, right now, I'm liking the combination that looks like this layout where I've got a 2 minute with my V-score signals and the JT multi as really a way to look inside of what's happening on the 5 minute. The 5 minutes really actually where I'm making the bulk of my day trading decisions. So could we have another time frame that's helping us understand what's happening within a longer term time frame? That to me is the only reason to have multiple time frames in our lives, to understand what's going on within a 5 as the 5 is forming. We need, though, one decision maker time frame, and for me, that's still the 5 minute. And it has been for a lot of years. But whether it's a 1 or 2, it's not going to change your life. I just have been using the 2. So thanks for the question. All right, thoughts on TLT. So Donald, we had a setup in the Sector Secrets Mastery in TLT, and then we gapped down through the entire trigger zone. And when that happens, we basically cancel our alerts and orders. I don't want to enter on that kind of move. Now, I'm still quite bullish ZB overall, but I'm bullish in a way that also respects the fact that we're no longer in a trend. So whether you're looking at ZB or TLT, and I like to trade both, for right now, I've hit the pause button and I haven't done anything since. But overall, my thoughts are, I'd like to be long, but I'd like a cleaner setup. I'd like to see this thing move back up into a double green uptrend where I've got the structure fully stacked of the 8, 13, 21, and 34 EMAs. But I don't have that, as you can tell, when you look at the bottom indicator on my chart, the JT multi-trend. I don't have that right now. So yellow markets are they're not untradeable, but they're not going to be the type of environment that's going to lead to the best kinds of trades and best type of follow through. But it is a viable market. Is the pit bull low in? Oh, great question. So, for those of you that don't know what the pit bull low is, all right. So, a lot of folks don't realize that it comes from a trader whose nickname was the pit bull, Marty Schwartz. He was interviewed in the original Market Wizard book, which is still the best of all the Market Wizards, I believe. It's still the best one. It's definitely a good read. And this is basically the gist of it. Now, the bottom line is we have, let's open up the calendar here. We have options expiry on the 17th, right? That means that somewhere between the Wednesday and Friday, where we are right now, right in the middle of that, Wednesday, Thursday, Friday. So 8, 9, and 10 of this month is where, now I've tweaked this pit below I've tweaked this pit below to things that I've observed over the past handful of decades. And I find that the lows are usually put in somewhere between Wednesday and Friday, not necessarily on Friday or on Thursday, which is usually the inclination for traders to assume it's those days. I'm really looking for it in the latter half of the week. And what that means is a lot of traders will buy that low. You really want to observe it the last hour of the day. And then they'll carry it at least to Monday and possibly to the options expiry. So pit bull low, yeah, pit bull low possibly in effect. It's always nice to use economic events that will further add some depth, some layer to why a low might be put in. It might be because of the economic calendar. It might be because of a monthly tendency, which is what a pit bull low actually is. So, I think the Dow setup that I outlined in the free video actually benefited possibly from the pit bull low psychology. So thanks for the question, Nikolai, or the comment. Absolutely. And next up is, hey there, Dave. Do I play individual railroad stocks or just a transportation index? I don't have a problem with playing railroad stocks. It's really all a matter of relative outperformance, really. That's really what. So let's say we look at Canadian National, BNSF, Kansas City Southern, Union Pacific, CSX. CSX was actually on my radar for a bit. It was, and mainly because of this 200. Mainly because it's not because it's got a wonderful trend. It doesn't, but mostly because that it's trying to organize into a little bit of bullishness. It's in the bullish hemisphere. What do I mean by that? When you look at a 200 cutting across a chart, daily specifically, being above the 200 is generally speaking sort of the bullish sentiment, bullish opinion for a market, as opposed to being below that 200. So I am looking for maybe a minor low test. So I'm looking for the minor low pattern, a test of the 200. And yeah, that means that going into today, this right here is the candle from yesterday, Wednesday. So today we might have the confirmation of that move off the 200. So CSX definitely has my attention. Union Pacific, UNP, similar, right? Similar. And then I've been waiting for the IYT to potentially break out. We've been testing the lower part of the range. This was 2 free videos, I think we did. So check out the Simple Trading YouTube channel. And I talked about this particular setup as well on the IYT at the lower end of the range. So yes, I don't mind to play railroad stocks, but preferably I'm playing either the sector or the individual stock because it's the relative outperformer. Maybe the stock, the boat, as I like to call them, is stronger than the tide. So however it is that I come upon where the relative performance is waiting for us at the stock level or at the actual sector level, that's what I'll go with. I just prefer the sectors. I was actually chit-chatting with Lorna, who many of you probably know. She's in all the different rooms. And I was telling her, I was looking back at, we were doing, so at the end of the month, we do reviews for each one of the masteries. And Trish and I were working on the review. Trish is my partner here in the office. And we were working on the review for August. And I was looking at my Wingman tracker where I put all my trades in. I've shared with this with you all before, Wingman tracker. And it allows me to look at the images of, what my typical trades are looking like, etc. Anyway, what I noticed, and I was talking with Lauren about this yesterday, is my win rate at the index or sector level is far better than that at the stock level. Now, that's not necessarily a good or bad thing, and it's not necessarily indicative of my strategies. It's indicative of the fact that betting on a single boat is a very binary trade. Either that works or it doesn't. It doesn't get to lean on a whole heck of a lot else. I mean, it's a very concentrated bet. Playing an index, playing a sector gives you, well, two advantages. One, if you like a lot of the stocks in that sector and you can find relative outperformance of that sector amongst the others, it just actually gives you a little bit more margin for error, margin for volatility than, say, an individual stock. So I love playing individual stocks. I don't have a problem with that. But I find at the index and sector levels where it's just typically for a lot of traders less expensive, and the follow through tends to be better. Now, this is not always the case. One of the reasons that I disproportionately benefit at the index and sector level is we do a lot of relative outperformance scans. We understand what's in the sector and we take advantage of that. So to answer your question, Dave, I don't have a problem with that, but if I can play the broader picture, great. But in this particular case, CSX and Union Pacific are on my radar, mostly because of the way they're interacting with the 200. Okay. Hope that helps. All right. And Jeff, yeah, I agree. That's definitely something that I'm watching as far as big pullback, 200 is in play. I absolutely like that. All right. So next comment is rollovers happening. Well, remember, so thank you for that comment. And that's very true. Now keep in mind, anytime you're looking at indices or any futures contract, and we're going to have first notice date to last trading day, especially with the indices, remember that there is I used to call it the pit date. It's the roll date. And even the CME gives you a heads up on this. It's the roll date. And the roll date will typically precede the actual contract expiry by a week, meaning that there's a day that you'll already notice the migration of open interest into what's going to be the new front month. So that's something futures traders keep an eye on. Track the open interest, and you'll never have to worry about first notice date or even the pit date, the roll date either. So I just track the open interest. Now, if you're a day trader, you want to track the volume. But if you're someone who likes to overnight trade the indices, for example, we're looking at December Dow, not September, track that open interest. And you will notice it will slowly migrate from the U contract to the Z contract as more and more traders are trading what is going to be the front month. So you can still trade September, right? You can still trade September until next Friday, right? So it's really not today, right? SSDN, it's really not today. The roll date's already happened and we have until next Friday. But in this window, you're absolutely correct. In this window, we need to start thinking about, is it still okay to day trade September? Yes, but if I want to put a longer term trade on, we've got to think about December, okay? And just know the first notice date for sure. And if you're trading the indices, know these roll dates if you're trading futures. Did I jump into XLF yesterday? I did. Yeah, I sure did. AJ? We sure did. We've been rolling with this XLF. There's a couple sectors that we've been playing quite a bit. Again, kind of going back to why August was such a great month for us in the mastery. I remember reading one of the emails that I got, or a comment that, one of our members was up 20% in August. And usually August is kind of a throwaway month. And we were actually playing it really defensive. We were looking at things like XLP and XLU in case Powell Donkey Konged the market going into Jackson Hole. So that was within a very conservative approach. And yet, many of our members are up double-digit percentage points for the month. And why is that? It has to do with the fact that we're sticking with the trends. XLV has been great. XLF has been coming on. We're not picking tops. We're continuing to follow the best trends that we can find, which means that we're not really looking at the Dow a lot or XLI or IYT. We're looking more at tech. We're looking more at financials, healthcare. There are even a few other sectors that are trying to organize, like XHB. We're avoiding things that are just choppy, like XLE, right? We're avoiding things that are just not relative outperformers. Focus on the relative outperformers, and what you're going to be able to do is, in the best way possible in 2021, replicate the types of behavior that you benefited from in 2020. All right. So with that being said, tomorrow is the first live trading day for our workspace bundle. So if you haven't picked it up yet, you want to use these tools, you want to understand how these indicators signal what I want to do in the market, head on over to simplertrading.com/Raghee workspace bundle. And tomorrow we start the first of two live trading sessions. Really looking forward to it. I'll see you all then. In the meanwhile, have a great day. Remember, the markets are digesting ECB and unemployment claims. I'll see you all tomorrow, same time, same station. All right, gang. Be good to each other. I'll see you tomorrow.